I'm delighted to have our panel with us and remotely as well. Let's go down the line with introductions and our first question, and maybe I can go to our remote guest first. When we're considering the risk profile of digital assets, what are the important factors to pay attention to? And do you think they carry any greater or less risk than the profile of assets which are non-digital assets? So Commissioner Mersinger, can we start with you?
Yes, absolutely. And can you hear me okay?
We can.
Great. Well, thank you for having me. I wish I was there in person, but happy to join you virtually. For those of you in the room who don't know me, I'm Commissioner Summer Mersinger. I'm one of 5 commissioners at the Commodity Futures Trading Commission, where we have oversight of the U.S. derivatives markets. And like many regulators, one of the areas that we are spending a lot of time thinking about and looking into and dealing with right now are, digital assets and how that impacts the regulatory space that we oversee. As far as risk of digital assets and whether or not that is different from other risks that we see from more traditional financial products, I think it's important to remember that, almost any asset can become a digital asset once it's on the blockchain. And we need to really look at these assets through that lens. Obviously, the way they are marketed, the way they are offered to people does change a bit because of that. For us at the CFTC, our markets are more traditionally used by more sophisticated, I don't want to say sophisticated, but people who have hedging and risk management needs and use these markets for very specific business needs. What we're seeing is an entry into these markets of retail participants, which is a little bit new. And that adds an extra of risk, I believe. So I try to look at it from 2 buckets. There's the risk to the investor or the market participant, the individual who is investing in these digital assets, and then there's the risk to the overall system. And we have to kind of consider both of those risks at the same time. And I do think it is a bit of a new way of looking at risk because it's so different from those who are traditionally in our markets and some of the existing regulations that apply to those individuals. So it is certainly a new and different area of risk. I don't know if I would say it's any more riskier than traditional assets. I think it just requires us to kind of take a new approach at how we look at these markets and those who are in them.
Thank you. Robert, do you want to start? We'll come back down the line.
Sure. I think where we've seen the most failures recently are from my perspective at Lukka, and we sit more in the back office operations supporting technology and operational risk domains. That's where I see those specifically operational risks of technology, data quality, things like that, are what are causing a lot of the missteps right now, in contrast to financial risk, which I think can be managed a lot of the same ways that we have before. Here we see the technology and the ops risk materially more complex to manage than traditionally because of all the technology that we're using on top of blockchain. I mean, it enables us to do some great things as well, but we have to learn some new things, which then touches how we manage the respective risks along the way.
Yes.
Thank you. Thank you. Thank you. I'll also take this opportunity to give a little bit of background of who am I and which institution am I representing. So I work for the provincial government in India. The province is called Hyderabad. It's a very important tech hub, not just for India, but for the world as a whole. In fact, this will amaze you when you hear me what I'm about to say, that 5 of the biggest tech companies of the world, which include Apple, Microsoft, Google, Amazon, Facebook, Meta that is. Each of them have their second largest footprint anywhere in the world outside their own headquarters in the US, in my city of Hyderabad. So that is how important this tech hub is. And I look after the information technology portfolio in the government. And we as a government feel very responsible that we should encourage promotion of more and more newer generation of technologies, emerging technologies. So we have seen that digital assets, to get back to the question, have become very important in a country like India as well. And completely agree with Commissioner Summer when she spoke about the risks, and also with Robert. But one additional risk which I notice, and I've personally seen such cases happening quite frequently, is related to cyber security. Like any other digital transaction, these are also prone to getting hacked or getting tampered with. And because most of the transactions that are happening on digital assets are anonymous, it becomes relatively easier for a hacker to really get into it, the bottom of it, and kind of play havoc with it. And we have also seen people become victims of these kind of cyber frauds, etc. So that is again an area where we need to look into it much, much deeply.
Hi everyone, I'm Lee Schneider. I'm the General Counsel at Avalabs, work with the Avalanche Public Blockchain. Very happy to be here. Thank you for having me on the panel. I'll start out by saying that I actually hate the term digital assets because I have a lot of frequent flyer miles, loyalty points, bank accounts, and securities, all of which are held digitally, just not on blockchain. So I actually prefer either tokenized assets or crypto assets as the terminology for what I think we're all talking about here. Although I do hope one day that my frequent flyer miles and other things will be on blockchain as well. And I think there are a couple of points that often get lost in the discussions here. One of those points is that tokenization of assets allows us to tokenize anything. And as Commissioner Mersinger alluded to, there are lots of different types of tokens out there now. I don't think anybody believes that Bitcoin and NBA Top Shot NFTs are the same thing. And trying to figure out how to regulate those two very different things as if they were the same is not generally in keeping with the way that the law, both in common law jurisdictions and civil law jurisdictions, has thought about how to regulate or what rules should apply. The rules tend to be based on the nature of the asset. So we're in some interesting areas here because a lot of the push for regulation has been towards treating crypto assets as if they are a homogeneous asset class. And we know that they're not, but so then the question is, well, if we are going to treat it as a homogeneous asset class, we recognize that all crypto assets trade in these marketplaces where there's a fair degree of interoperability, et cetera. What are the most important features we want in terms of regulation? And I think for me, if not at the top of the list, certainly in the top three would be market integrity. And we can talk about how to define market integrity. I think there are lots of principles from financial instrument trading markets, but there are lots of principles from other marketplaces as well. And so that for me is where the discussion might profitably move at this point.
So that's a good segue into the next topic, which is systemic risk. So what have we learned from recent events where the failure of one entity can have a knock-on effect to other entities and then ripple outwards into the industry? Some of the effects that we still may not have seen today from what's happened recently. So what are the kind of the learnings and the things we need to pay attention to from that?
Yeah, I guess I'll go first. Unfortunately, I think a lot of the lessons are ones that traditional markets have already learned in the past. Nothing was really too related to innovation or blockchain that we've seen in the failures right now. I think that sometimes the semantics and the terms, kind of like was just pointed out, can get in the way of just simply managing risk. And because they'll wrap their heads around even the word NFT right now is, there's communities that are trying to avoid using that and calling it crypto art or, pick another term, which I understand the logic behind, but it's funny as it is, I think the semantics are a key part of that problem. And ultimately, this technology can be applied, just like the Commissioner said earlier, it can be applied to virtually any asset, anything that has value. And when we do that, that means it's going to touch all of our regulators. It's going to touch anybody that touches, an asset today. And so we need to think about it that comprehensively and stop trying to push it into one regulator, one asset class, and so on, because it won't fit there.
So I would say this, that the recent experiences, the recent examples point to two things. One is that we are on a learning curve, and the faster we learn, the faster we adopt, the faster proper regulations are put in place. We'll all benefit from it. And the second important learning is that there are still many things that we have not been able to really anticipate. And how do you ensure that we are better prepared? There is much more. So I spoke about cybersecurity in my previous answer. I'll share something related to that. So there is a global registry which incidentally is sponsored by Verizon, which actually captures all kinds of security breaches which happens in enterprises, governments, elsewhere. And this registry is shared amongst members. So there is a great deal of knowledge exchange, great deal of learning. And I guess something similar will need to be done to ensure that whatever we learn from one experience or one bad experience rather, we are able to kind of collectively find solutions to it and move on from there.
I very much agree with both of the points that have been made. I do think a lot of the issues that we've seen are standard issues. Most people focus on the lending part of the equation, the mismatch between maturities, et cetera, that happens in these cases. But I think your focus on cybersecurity is absolutely key. While everybody is busy talking about the problems there have been in CFI, a lot of people are ignoring some of the hacks and other problems that there have been in DeFi. Now, the DeFi markets, the really high quality ones, functioned very, very well, functioned as designed, I think, through all of the trouble we saw last year. But the cybersecurity point is key. The other thing that I would just say to sort of tie it a little bit broader is, I mentioned market integrity. I think this operational integrity idea is another place where regulators could profitably take a look. There have been a lot of cases where, again, particularly financial services regulators, but not exclusively, have focused on cybersecurity and technology issues for the regulated community. And I think that's another area where developing common standards or guidelines, et cetera, would be hugely profitable. So I would add operational integrity to market integrity as an important thing.
Commissioner Mersinger?
So that's a great point to follow up on, because when you think about cybersecurity and those types of issues, and you think about it on a systemic level, what we are seeing in the U.S. is more and more traditional financial players entering this space. So you have to ask, is there a risk if the cybersecurity risks are higher in this space? Does that have a risk of bleeding into the traditional finance system and then becoming more of a systemic problem? And that's something that we're mindful of. I think one of the things we struggle with is that these markets tend to be pretty opaque, at least from our standpoint, the way our system is set up. So we don't have the information that we would normally have into these markets. We don't have the view. That's not anyone's fault other than kind of the way our laws are set up. So until we can really have that view into many of these markets and be able to see what's happening kind of real time, the point about market integrity, it's tough to ensure market integrity if we don't have the visual line of sight there. And the problem is then you come in after the fact, after something bad has happened, and you're seeing information afterwards. So it is something that we are constantly thinking about. In the U.S., the prudential regulator is looking at our U.S. banks and other financial institutions, asking a lot of questions about their involvement, and just trying to understand, how far does this risk reach, and if there are major failures, as we've seen recently, does that risk contagion into other parts of the financial system market? So it's something we're always thinking about, and I think it's a great question of what is the potential for systemic risk in these spaces.
So staying with that thread, and a question to our policymakers and regulators on the panel. What are the various strategies being adopted by regulators? And could you tell us about how you're approaching digital assets in Telangana, and maybe first with you, Commissioner Mersinger at the CFTC? And what are kind of some of the major concerns long term?
Yeah, so one of the things that I have probably been the most vocal about, or most, expressed the most frustration about, at the U.S. level with the regulation is because we don't have standard policies and we really haven't looked at how we're going to manage these markets, the regulation then becomes regulation through enforcement. So the after the fact coming in, enforcing, enforcing rules that don't necessarily fit this market, this space, the players in the space. And so what I've been trying to kind of push for is find a way to offer some clarity and some certainty. So, come up with a framework for how we're going to look at these assets, how we're going to regulate the market, who's the appropriate regulator, and how do we ensure that innovation can continue and people can continue to invest and put their money in these markets safely and with full disclosure, but without, making it so that any new innovative idea could potentially run the risk of getting crosswise with a regulatory enforcement division. That might take legislation from Congress. I think it will. But in the meantime, I think what we're missing is bringing all of the U.S. regulators together to start to talk a little bit about what do we have existing right now, what could potentially be changed to allow a little more clarity into how we regulate these markets, and then look around the globe at how are other global regulators looking at this, how are they dealing with it, and start building out a framework so that we are offering a safe regulated space and not, through enforcement pushing more and more of these markets to areas where we won't have any view into these markets. We won't have any transparency, yet, our citizens still will be able to find a way to invest and, have their assets at risk. Kind of what we were thinking about was we're kind of at a next point in the U.S. We'll spend a lot of time of 2023 really focusing on this, and that we just walk away with a little bit more clarity and certainty for those who are in the markets and those who are offering new products and new market space.
Thank you. Jayesh?
So the position in India is not very different from what Commissioner Summers spoke about. See, everyone wants a very robust regulatory system. But again, the dilemma is between ensuring that innovation continues. Mostly, we have seen some startups who are bringing out some amazing and very transformative products and solutions. So how do you encourage innovation to happen on the one hand? But if you ask all these startups, all these innovators, they are very worried about regulatory uncertainties. Like they would like clarity, they would like to have regulatory certainty. So one way in which we have decided to tackle this dilemma, and I can again give you a very real example from my province of Hyderabad. This relates to Web 3.0 incidentally, and give me a couple of minutes to use this example to illustrate the point. So actually there's lots of young talent in India which wants to work on Web 3.0. But we notice that many of them are actually setting up their companies and operations outside of India. They are in Dubai, they are in Singapore, and we are losing that kind of talent. And if you ask them, why is it that they are fleeing India? One of the answers will be about this regulatory uncertainty. On crypto in particular, there's a huge pushback from the federal bank. And obviously, as Lee mentioned, they are everything is not homogeneous, but they are looking at everything, all such products with the same lens. So what we have started in Hyderabad is to set up a regulatory sandbox, a Web 3.0 regulatory sandbox, which encourages innovators to try out ideas where they could be on the margins or borderlines of pushing the envelope related to some particular regulatory clause. But the government backs them, the government supports them. We ensure that, and in India, perhaps it happens elsewhere as well, regulation is both in the ambit of the federal government as well as provincial government. So we take complete responsibility of all the clearances, approvals, etc. of the regional government, the provincial government, but we are also roping in federal regulators for this sandbox. So I guess this is the way in which you bring the regulators in the regulation development process itself, rather than they are on the top, they are looking down and putting this order or issuing that regulation. I guess a bottoms-up approach in which they are also stakeholders, they are also involved in the process. And this sandbox is the best example that I can think of.
Thank you. So turning back to industry with Robert and Lee, what are our best strategies for effective risk management across digital assets? And are there any core principles from traditional finance that you would like to see better implemented as it relates to digital assets?
Yeah, I'll say, and I agree with everything that's been said recently. The piece of the puzzle that we're focused on at Lukka is supporting the underlying infrastructure that facilitates this risk management, really. So it all starts with collecting data, making it usable, and just that very first step is a lot more challenging than most realize that haven't actually been in the industry and interacted with all of this data. And so I think that it comes back to the education, the awareness first, to say, hey, you can't really get to financial risk management or any of these other more complex processes without ensuring that the basics are orderly and are done properly, that your balance sheet is clean, right? Then we can start getting to risk management and all the other aspects that we do. So I think it's that simple, really, and there's a lot of work to be done within that particular risk domain.
I think the data point, which I think everybody else on the panel has raised now, is super important. I recently worked with some folks on a paper that will be published shortly by Cornell, where we compared the impact of the Terra Luna implosion on two CeFi lending protocols, two DeFi lending protocols. With the DeFi lending protocols, the quants on the team were able to get data very easily. With the CeFi lending protocols, there's no data available. So to Commissioner Mersinger's point, figuring out ways to make sure that that data is available so that you can actually do an analysis of what the problems are or were, I think is huge. The other thing that I would just like to say is, I think a lot of times we all forget the bigger picture of what's going on here. Blockchain is not just about creating crypto assets or that people trade and whatnot. Blockchain's about re-architecting the infrastructure of the internet. And I think GBBC has done a good job this week of having panels that talk about many different use cases of blockchain and, frankly, use cases of tokenization that are not about creating crypto assets that get traded. And so we need to sometimes take a step back and see the larger picture of what's going on from a technology standpoint. And that can often help us isolate particular areas that we need to focus on.
Thank you. So we have just about 10 minutes left. Before we go to sort of wrap-up question, are there any questions in the room? Here we go. Sandra?
National security level, I think, problem. Data storage. Most of crypto and pretty much any other industry relies on, what, 3 major companies in the world to store data in the cloud? I'm talking about cloud specifically. Any thoughts on that from a risk standpoint? What should the industry do, if anything?
So one of the nice things about some blockchain layer 1 protocols is you can actually run them on your laptop. Our engineering team had a contest a year ago to see who could run a full validator node the least expensively, and one of the guys actually figured out how to do it using a Raspberry Pi, and was able to run a full validator node on that basis. So look, I think that kind of consolidation that you mentioned, Sandra, is important. We do see that kind of consolidation in proof of work with the mining pools. We see that kind of consolidation in proof of stake with the staking as a service providers. So these consolidation issues are always going to be important. Nevertheless, the nice thing about the internet and the nice thing about re-architecting its infrastructure is finding ways to make sure that individuals can be just as active in their participation as large companies. And I think that kind of economic inclusion, the kind of economic inclusion that comes with if you have a computer and internet access, you can run a validator node, you can stake tokens, you can do DeFi, you can program your own smart contract and build your own business on the internet. I think all of those things are creating a kind of creating the basis for a kind of economic inclusion that we've not seen globally.
Yeah, I think it's a really interesting question. I mean, even just the word cloud, when you reflect back on it, it's a metaphor. All that, you know, none of this data is really up in the cloud. It's somewhere physical, sitting somewhere, and it's owned by some company ultimately today. And you know, as you pointed out, there's not a lot of those companies that have really monopolized the space globally. And you know, as far is that a problem today? I don't think it is. I see the risks that it can lead to in the future for sure. And that's I think going to be tricky to figure out. I mean, we can continue to spread out the data, put it in more locations redundantly, which is what these providers do to give us all, you know, assurances when it comes to business continuity and so on. But it is tricky. I think that there's probably a few more problems to focus on before that one becomes more material.
I'll just add.
Please.
I'll add one more perspective to it. So if someone is trading in a conventional kind of a financial asset, let us say stocks or mutual funds, lots of awareness campaigns are run to educate the person about the potential risks and how do you redress your grievances if you feel that you have been short-charged. I guess it is also a high time that all the cloud service providers explain about the security features, where is the data actually located, and what is the cost of storage and things like that. And I guess all kinds of stakeholders need to run these kind of campaigns together so that the credibility of the campaign is more. It is not just the digital companies need to kind of run these campaigns, but the cloud service providers also have responsibility, the regulators have responsibility. So I guess more and more awareness about how risks are there, but how are efforts being made to mitigate those risks is also very important, in my opinion.
And Commissioner Mersinger, any comments on that question?
Just one thought, and it is interesting. I agree that there is this consolidation in cloud services, and you know, we've been seeing that at the U.S. government level because there's a lot of shifting from storing data internally at the agencies to go into cloud services, which is probably safer than a lot of the government systems, and we've had some major breaches within U.S. government, so that's the good news. I think brings in a new kind of interesting issue is suddenly physical security risks. So where are these servers located? How do you protect these physical locations now that are so critical? They become almost critical infrastructure to the country, and that adds a new layer of risk. And certainly, as Sandra mentioned, the kind of international security and it's a new layer of risk that we have to think about, and it's not any one regulator. I think for every country, it's probably a broader discussion that really has to involve all levels of government to make sure that if we are going to be consolidating data in these locations, how are we protecting even with redundant areas and having backup. There's still infrastructure involved, there's still a location involved, and how are we going to protect that area, and it's just something new that we really have to consider.
Thank you. Any other questions in the room? No? Okay, so let's move to our wrap-up question then. So staying with you, Commissioner Mersinger, and then coming back to the room, what do you see, or what would you like to see as the major development in managing risk in digital assets in 2023?
I think first and foremost, I would like to see some sort of regime in place where we have data that can be reviewed, that these markets have a certain amount of transparency. We're not dealing with, after the fact, after money has been lost, or people have been fraud, victims of fraud. So I think that's probably step one is, create a regime where people can come into the regulated sort of, and just.
Let's come back to the room, and maybe we can go back to the Commissioner. Robert?
Yeah, I mean, two things come to mind. One, I think, kind of which was alluded to earlier, is I'd like to see rules, and I mean this across all regulators, supervisors, standard setters. I mean the whole lot that are that enable a bit more flexibility when regulating this innovation. So less focused on types of businesses and what they're calling themselves, because they all tend to call themselves different things in the crypto ecosystem than we've seen traditionally, and instead focusing on the types of activities that they're doing, which I know that's beginning to happen, and there's a lot of enforcement that's happening, but we haven't seen a lot of the language in the rules reflect the same concepts. So I think that, and then maybe combined with including a lot of the service providers that are catering to all of these big new financial institutions like the crypto exchanges and the market makers, because a lot of them are more neutral parties that maybe aren't regulated themselves, but are definitely part of solving that. And there's a lot of knowledge and education that can happen by utilizing them.
So one thing that I'd really like to see is a greater extent of multilateral cooperation. Problems are more or less the same across the world, but I don't see governments or regulators or even product developers, service providers really talking to each other. So I would really prefer that to happen, and hopefully GBBC can take this as an important agenda for themselves.
You stole my answer. I think that's absolutely critical. Look, everything that happens on blockchains happens on the internet, happens globally, automatically, all at the same time. And if there's not good communication, I think we're lost. It's just going to be balkanized. You're going to have to try to figure out what rules you're applying with based on whether or not you're operating a validator node or mining someplace, or it's just going to be way too confusing. There are certain areas where, sure, it can be localized, but a lot of these kind of core things that we're talking about in this group, there needs to be a lot more global cooperation.
Thank you. Commissioner Mersinger, if you can hear us again, we'll come back to you to complete your points.
Can you hear me okay?
No, we can't hear you. AV, are we
No.
able to get the Commissioner back? We can see you, but we can't hear you. Okay.
Can you hear me
I
now?
hear you now, yes.
I'm just going to end on where everybody else kind of ended, that, if we've learned anything from previous financial crises, that markets are global and that regulators need to have a global worldview of these markets. And we need to come together and just find ways to work together and try to provide standardization across jurisdictions so that these markets can continue to operate efficiently and effectively in the global markets.
Well, thank you very much. Thank you for your attention, everyone. Thank you, Commissioner Mersinger, for joining us remotely and bearing with us through the technical challenges. Thanks to my fellow panelists on stage here as well. We're going to take a 10-minute break.